Most people believe investing is primarily about buying assets at a low price and selling them later for a profit. Growth investing certainly plays an important role in building wealth, but many financially successful individuals focus on something even more powerful: cash flow. The reason is simple. Financial freedom is not determined solely by how much money you have accumulated. It is determined by how much income your assets generate on a consistent basis. An investment portfolio worth millions may look impressive on paper, but if it produces little income, its owner may still rely on active work. Cash flow investing shifts the focus from simply growing wealth to creating a system where assets regularly produce income without needing to be sold. Cash flow is the income generated by investments over time. Instead of waiting years to realize gains through appreciation, investors receive money while continuing to own the underlying asset. One of the most common sources of cash flow is dividend-paying stocks. Many established companies distribute a portion of their profits to shareholders in the form of dividends, creating a steady stream of income. As investors increase their ownership in quality businesses, their dividend payments may grow as well. This allows investors to benefit not only from the company's potential growth, but also from recurring income that arrives regardless of whether shares are sold. Another major source of cash flow is real estate. Rental properties have long been favored by investors because they can generate monthly income through rent payments, while potentially increasing in value over time. A well-managed property can provide consistent cash flow for years, making it one of the most popular wealth-building strategies in history. For those who do not want the responsibilities of property management, real estate investment trusts, or REITs, offer an alternative. These companies own and operate income-producing real estate assets, allowing investors to participate in real estate cash flow without directly owning buildings or handling tenants. Beyond stocks and real estate, bonds and business ownership provide additional opportunities for income generation. When investors purchase bonds, they are effectively lending money to governments or corporations in exchange for interest payments. These payments can create a predictable and relatively stable stream of income. Similarly, owning a profitable business can produce ongoing cash flow through profits, distributions, subscriptions, or recurring revenue. Many wealthy individuals combine multiple asset classes because each contributes a different type of income stream, reducing dependence on any single source of cash flow. One of the most important principles in cash flow investing is diversification. Relying entirely on one source of income can create significant risk if that source weakens or disappears. Multiple income-producing assets create stability and resilience. Another key concept is yield, which measures the amount of income generated relative to the investment amount. However, experienced investors understand that a high yield alone does not guarantee a good investment. Sustainability, financial strength, and risk management matter just as much. A lower but reliable yield is often more valuable than a high yield that cannot be maintained over the long term. Reinvestment is another powerful force behind successful cash flow strategies. Many investors choose to reinvest their early income rather than spending it. Dividend payments can purchase additional shares, rental income can fund new properties, and business profits can be reinvested into expansion. Over time, this creates a compounding effect where income generates more assets, and those assets generate even more income. This process may seem slow at first, but over many years it can dramatically increase both wealth and financial independence. Cash flow investing is not a get-rich-quick strategy. It is a long-term system built gradually through discipline, patience, and consistency. Ultimately, cash flow turns assets into income, and income creates options. Those options may include greater flexibility, reduced financial stress, earlier retirement, or the ability to pursue personal goals without depending entirely on a paycheck. The most successful cash flow investors often share three core principles. They focus on income alongside growth. They build multiple streams of cash flow for stability, and they reinvest earnings to accelerate future income. By owning strong businesses, quality real estate, reliable financial assets, and sustainable income-producing investments, they create systems that continue working for them year after year. If you want more insights into investing, passive income, and wealth-building systems, explore more videos on Wealth Finance 61, subscribe for future content, and share your thoughts below.